The key story in crude oil markets remains the likelihood of a deal to be struck in late November between OPEC and non-OPEC producers. This has driven oil dramatically higher throughout October, but just recently we've seen the market stabilize. We now got WTI crude in the $50 to $52 range. Brent crude is trading within $51 to $53 range. We have seen news over the weekend that the Russian and Saudi Arabian energy ministers met, but again we don't have any firm idea about production cuts and whether actually Russia will join the production freeze or production cut. So there's still a lot of uncertainty out there. Iraq has been out saying that they need the extra money to fight the ISIS at the moment, so they're reluctant to join in a production cut. So that really leaves very few of the OPEC members in a position to cut production when the data or when the deal has to be hammered out over the next month. So there's a lot of uncertainty whether the deal can actually be made and also if it is made, by who and by how much and how are they going to police it. But the market has given the producers the benefit of the doubt at this stage. The market remains well supported. Even some of the news that we've seen have not been price supportive. Oil prices has remained firmly above this 50 level. If we look at the speculative position in the market, hedge funds have also been buying into the idea of a deal. We've seen the net long in WTI crude reach the highest level since 2014, and it does indicate that there is obviously a lot of pent-up expectation that the market is going to move higher over the coming months. It also means that any failure from OPEC to deliver what they promised will trigger a sharp correction in the market. We've seen that on several occasions now since 2014. When the market becomes too long, one-sided, either on the long side or the short side, we have often seen a correction to the tune of 10 to 20%. That is probably the biggest downside risk at this stage, that the market has run too far ahead of itself in terms of expecting, or in terms of what can be expected from the meeting. But just in the short term, as I said, we are stuck in ranges. If we break out of this, we'll see an extension, but overall, the market's already built up a long position ahead of the announcement, so the upside at this stage, from my perspective, seems limited, whereas if we start to make it back below something like $50 on WTI and 51 on Brent crude, then we could see some profit-taking hit the market. So really, we need to break out of this range in order to gauge where we go next.